Only in as much as it increases the probability of no deal Brexit again, which I think is unlikely. So the market's pricing about 20 to 30% odds of a no deal Brexit this year, which I think is about right. The question really is what kind of an extension do we get? If we get an extension, number one, number two, when do we have elections after that if we do, and then the result of the election, were ex-ante coalitions before we head into the election. So there's a very strong possibility that we are sitting here in about 3 to 6 months' time and we're in almost exactly the same position, and the sterling therefore is not bottomed yet, in my opinion.
Well, it's interesting, when we look at sterling here, we have seen a renewed spate of weakness, which the markets have kind of interpreted as a Brexit story, but given that DXY, the dollar index, is now edging up towards a 2-year high, could perhaps we ascribe it more to what's happening with the dollar and some perhaps safe haven flow rather than really being about the pound per se?
It's difficult because, I mean, if you look at the volatility of the pound, if you look at the volatility of the sterling, that's sitting at sort of 90 percentile, very high euro sterling vol as well. If you look at euro vol, it's sitting at 2 percentile. So if this was a dollar-driven move, you would have seen a similar rise in volatility across yen, euro, and the sterling. This has been more sterling. So I think Brexit still remains the key driver of this currency. I think what has been a little more surprising is that the euro has been extremely muted in the face of sort of the entire vol in sterling, and I think that's likely to change. So the euro in trade-weighted terms has been much weaker than you would assess by looking just at euro dollar, because euro sterling has been moving. So from here, I think it is unlikely that the sterling has completely bottomed, because we still have election. You could get a Tory party again, and therefore we could be talking about no deal Brexit again. And B, the data in Europe has just not picked up. And as a result of that, that slow burn of weaker euro and a stronger dollar, I think, will continue.
Much of the commentary around the UK often focuses on some value opportunities. If you look at some of the deeply discounted assets across the UK, and in your research I noticed that you're looking at some value as well, particularly around the investment grade world here in the UK. Why is that offering more value? Is it just purely a yield story?
Well, it is a yield story. It is also a story of how far valuations have gone. So we'll see. I mean, we were speaking about consumer staples earlier in the show. We'll see how Tesco's results this week go. But there's some parts of the domestic economy that are completely beaten up. And in terms of valuations, it gives you much more upside optionality than it does downside optionality. So in simple terms, the correlation with the sterling is likely asymmetric. It's going to be slightly lesser if we get a move towards a no deal Brexit. But if we were to move towards a situation where Brexit itself is being questioned, then both the sterling and the value stocks in the UK could pick up quite aggressively.
Hi, I'm Bhanu Baweja, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.